Hello, this is Jim Wicklund with another edition of Energy Espresso. And today I have the privilege of having Marshall Adkins, the head of energy investment banking at Raymond James, and an opinionated soul here talking with me today. It's interesting, we kind of didn't do a lot of podcasts during the first couple of months of the Iranian conflict because by the time this podcast would hit people's ears, things had dramatically changed. So we decided to start back up again, and of course, as soon as we do, things have dramatically changed. So we actually have a little bit to talk about.
It's hard to get bored doing this job.
It is exceptionally difficult getting bored, and today, might have been yesterday, depends on when the news actually hits, Mr. Trump said that the ceasefire is over, and he referred to the Iranians as scum, which is an interesting negotiating tactic. And it now looks like the conflict is back on. And as a result, oil prices have moved up somewhat sharply from a low of about $68, which is the point I bought calls on oil. I didn't put in nearly enough. It was just something to play with. And now we're seeing oil go up.
Can I call you a jackass? Is that okay? Because I wrote it all the way down, but thank you.
There were on our vacation a couple of weeks ago, there were a couple of people who had gone long oil at
some higher number. And the first 3 days of the trip, there was a great deal of drinking done and commiserating about how oil prices falling $6 a day every day for a couple of days was no fun. Probably the most expensive trip I've ever had.
Without it meaning to.
Yeah.
I was at some event a couple of weeks ago, and somebody said, wow, oil's at 100. Should we be buying everything? And I made the observation that in my few years of doing this, I always remembered that most of the money was made when you bought these things when oil was low, and you sold them when oil was high. So that kind of stopped me from going nuts on buying things when oil was 100, thereabouts. Brent was higher. At 68...
I think your calls are going to do very, very well.
Considering that before this whole thing started, it was 65. So a $3 premium, considering who you're dealing with, didn't sound like a bad deal. Now oil is where today, 75?
It is, just under 75, okay. Bouncing around there.
That's still not much of a premium, considering we just called the people who run the Strait of Hormuz scum. What's the latest? What happened today? You've been paying attention?
So yeah, well, first let's timestamp this because it's like
exactly.
It's like July 8th at 3:00. It may be different by this evening, but you've round tripped this thing over the course of let's say 4 months, and you've lost so far $1.2 billion of supply to the market. In the old days, if you lost 100 million, it was a really big deal, and here we are down $1.2 billion as of today, likely to be down much further over the coming months. It doesn't seem like flows are gonna resume anytime soon, which the market was discounting, right?
Yes.
The market had gotten at 68 back to the point where not everyone. A lot of analysts were convinced that this thing's going to come back in full force, and you saw the lower estimates from a lot of the big brokerage firms.
Lowering numbers, EIA lowered numbers.
You're going to be in the 60s, and I'm sitting there going, in our career, we've watched Iran now for about 40 years, and, these guys aren't going to agree to anything. Like, this isn't over by any means.
No.
And I think that's what we found out today or yesterday.
The fanatical Muslims, I'll put it that way because I have a lot of Muslim friends who aren't in that camp, but clearly in Iran the IRGC is made up of a bunch of fanatic religious people, and they have no qualms at all about lying to us because we are infidels.
Yep.
And there is no sin in lying or deceiving us at all. So the idea that we were supposed to trust them to start with was, to me, kind of a joke. And the comment was made several times. In fact, Mr. Trump said this, I think, yesterday, that they would sit in a meeting and discuss things, then Iran would walk outside and say the topic was never brought up. So I think reality may have finally hit.
Yeah, I think as we've seen Trump do, he'll change position 6 more times in the next few weeks. But he did say this morning when they asked him, what's changed from when you said these guys were good guys now? Because, well, I got to know them. Yeah, well, there's that.
There's that.
So no, this is, when you think about what's happened, Jim, in the last 4 months, we are seeing multiple things that we've never seen in this sector for 70 years, right? This is unprecedented stuff. During the Arab oil embargo in the 70s, you lost a third of the production that we've lost so far in terms of barrels. Okay, let's look at it in percentage terms relative to demand. Still, twice as much supply destruction in percentage terms as back in the 70s. I kind of vaguely remember the 70s. You and I were two of the few people around then, and late in high school in the late 70s, we're in gas lines, right?
Yeah. This time we've had no gas lines.
2x the disruption there. Never seen that. Never seen the Strait of Hormuz shut down.
That's right.
That's unprecedented. And the one that came out of left field for me is you've never seen an entity as China did this go round that's managed the demand side to the degree they have. In all of the past situations like this, it's always a price-driven response. Like
right.
It was when COVID hit and you took oil prices negative, okay, we got to shut down production. Mm-hmm. This was China managing a much larger inventory situation than we all thought.
Well, they're adding 1 million barrels a day to their SPR. They're not doing that now.
I think what we found out now, they were probably adding more than that. And a lot of it was stuff we couldn't see because everyone's like, oh, you got 1.2 billion of inventories. And we haven't seen that fall very much.
No, we haven't.
But we've seen them.
They got to be pulling it out of somewhere.
We've seen them whack 4 million barrels a day
right.
of imports. Well, you can't have it both ways. So they were pulling inventories. They shut down refineries to the tune of 4 million barrels a day. Like, oh my God!
They've also shut down factory times, and they're working 3 days instead of 5. And
so
that's still hard to come up with 4 million barrels, though. I understand.
I went through that, and yeah, it was like, all right, you can only drive an electric car, and hydrocarbon cars can only be driven 3 days a week, and we had the petrochem. Let's switch what we can to coal because they have a coal petrochem, and like you said, factory times. I went through and added all that up. I came up with like 400,000 a day. It's just not. It wasn't a big. Say it's 500. Just to be generous.
That's still not 3 or 4 million.
3.5 million now is what we're talking about, and I think we can clearly see they shut down refineries, which is about 2.5 of that 3, and I think they probably pulled 1 million out of these underground storage facilities that we didn't realize they were putting oil into.
Yeah.
So the effect of that is we were probably more oversupplied than we thought coming into this because China was putting away more than we thought. Mm-hmm. Then China, 4 million, that's 4% of demand. They just said, yeah, no problem. We're going to shut it down for 4 months. Cannot do it indefinitely, right? There is a limit.
They've done it up until today.
They've just started allowing their refineries to sell products again in the open market. So you saw the impact upon refined products, mm-hmm. which is part of the reason why we have the refinery margin today is almost as high as the crude price today, which we were at $15 3-2-1 spreads, crack spreads, which is the refinery margin for those of you that aren't aware. We were $15 in January. That number is now over 60 today.
It is.
And you were buying crude at 67, 68 a week ago, right, or days ago.
And I was buying the refiners a month ago.
Yeah, and so heating oil today at one point in time was up 14% because. That's the other story. Unprecedented here. Here's another thing. We've already gone through 3 or 4. You have whacked about 7.5 million barrels a day of refinery capacity offline, and 2.5 million of that roughly is from the Middle East, 2.5 from China, right? Plus. Ukraine's getting pretty good at blowing up the Russian stuff.
They have gas lines.
So
they have gas lines at their stations.
7.5 million out of the 100 million plus we consume of products every day is off. What?
Okay, but I keep coming back to, I forget which fabulous investor it was, whether it was, whichever one it was, that the market isn't irrational. If you don't agree with the market, instead of saying the market's wrong, figure out why you're wrong.
Right.
So with that said, how's oil only 75? And how did it get to 68?
So multiple things, I think, going on, because I've obviously, having been long the whole way down, I was in trying to wrap my head around what, and by the way, almost everyone in our seat that looked at this 3 months ago, 2 months ago, even a month ago, was unanimous about, wait, this is crazy big deal, right? That 70 is not in the cards again anytime soon.
Not everybody, but okay.
I'm sure you had it the other way, but I would say 90% of the people.
I agree.
And as you know, getting 90% of our industry to agree on is out of bounds. That doesn't happen. And
usually when we do, we're wrong.
Usually, and this time, clearly, it was wrong. So why was everyone wrong, including myself? And the answer was China at 4%.
Yeah.
We can't call it demand destruction. It was not destruction.
I call it mitigating circumstances.
Right. They managed the system, as we did with the SPR. So let me walk through some math. I don't want to bore people with the math, but this is actually I hopefully dumb it down. We've lost 10 million a day out of the Middle East of crude production for the last 120 days. Okay. That's a good rough number. And then these are all round numbers. Okay. You came in 2 million oversupplied. So you got to take that off the top to begin with. Now we're arguing, all right, where did the 8 million go? Not much of it went to commercial inventories, which drives price, right? Why? Well, because China whacked 4 million.
Yep.
Let's call it 3.5 of non-demand destruction related. It was just them managing the system. You had about, let's call it SPR releases of another 2. Right, so now you're at 5.5 million, and then you had commercial inventories of another 1.5 million.
Which every country has been releasing, yeah.
Right. So now we're at 7 million of the 8 that we've explained, but it was all inventory. 7 million of inventory, SPR or product, which is what the Chinese stuff was, or commercial, right? Which leaves maybe 1 million of legit demand destruction due to high prices. Maybe 1 million. I'd take the under on that, but
I'm going to say driving in the U.S. has gone up in the last several months, so there hasn't been a whole lot of economic demand destruction from high prices.
We were terrified about jet fuel.
Yes.
4 months ago. If you look at last week's or the inventory report we got today, actually, on the U.S. situation, jet fuel is way above normal.
It is.
We got plenty of jet fuel. Well, the refinery said, you know what? Shortage of jet fuel. Let's change. Let's make more jet and less diesel. Well, diesel, which is heating oil effectively, now is going through the roof because, oh no, we don't have enough diesel.
Though it is June, we don't. Nobody's thinking about that, but yes.
Right. Yeah. So
Not on everybody's mind.
But trucking, airlines, I mean, everything you look at, every indicator you look at around the world, except for the Chinese stuff and maybe some other Asian stuff, says there wasn't any demand. Prices didn't
There
get
hadn't been
high
any
enough.
demand destruction. No,
This
I agree.
was, and we all thought, because every other time this is happening, you take 3 million offline, well, prices are going to go to 150. You take 10 million offline, well, I don't know what they're going to do, but it's a big price, right? And you took 10 million off, and we were right back where you started 4 months later, and you still had last week, even though the strait was kind of open, somewhere, depending on the day, somewhere between 5 and 10 million of Middle East production that was shut in.
Yeah.
And I'm looking at it going, yeah, I don't know if we're going to 50 or 60 or 150.
But you got Saudi using smaller tankers, taking alternative routes.
UAE doing that.
UAE
Yep.
building, expanding and optimizing their pipelines.
Yep.
Again, mitigating circumstances. It always surprises me that the extremes on all these things we expect never happen because the rest of the variables don't stay static.
Right.
But in this particular case, I'm the first to admit that even with a couple of variables not staying static, that's still a staggeringly large number of oil.
It is, even when you account for all the other stuff, we've drawn inventories, most of it in SPR, and I'm calling China SPR.
Yeah.
SPR products, we've drawn down 7 million a day for 4 months. That's a crazy big number.
But now I'm reading reports saying that we weren't really at tank bottoms or as close to tank bottoms as we thought.
Well, I think everyone's just making up those numbers, right? And I get it. Our job a lot of the time is we have to give an opinion on something that we haven't seen before, and you kind of run the math, and it's like, all right, here's my best guess. I don't know. I don't know what tank bottoms are. They're conceptually, the tank bottom concept is correct, but
yes, well, that's easy. Yes,
what that number is. Big argument. You look at the U.S. SPR. Almost Hochstein, the Biden energy guy, was out saying, "Well, we all know that you can't get below 300." Well, you're at 319 as of today.
Yeah.
Well, wow, that's kind of
close.
getting close.
You're
but
close.
Is 300 the right number? I don't know. That's just one guy saying. I mean, I'm sure they've done some studies, but. Could it go lower? Yeah, it probably can. Same with the tank bottoms.
Okay, so everybody knows tank bottoms. Think about your car, and when you check the dipstick for oil in your car, if it isn't right up to that line, you say, well, I need to add some oil. And you do, because your red light will come on and say it's low. You're not out of oil. You're just out of enough oil to keep the system operating.
Right.
So none of this is taking tank bottoms, taking our storage to zero. But you can't go to zero because then there's no pressure to produce. And so when we talk about tank bottoms, it's the level of inventory where the oil no longer flows out.
Right. And the U.S., because we've been, outside of China, the largest provider of crude into the market, is remarkably close to a lot of those theoretical numbers. What's the actual number? I don't know. We may find out. Actually, I think we will find out here in the next 6 months. I don't think by any sense we're out of the woods here.
I had hoped and prayed 2 weeks ago we were out of the woods.
And then you bought crude.
Bought crude, but I was enough that if we're not out of the woods, and you can't assume that this is all going to stick. Those of us who have been in this business and visited and worked in the Middle East and understand that not every place is America. As an aside, there's only 15 to 20% of people in the U.S. have ever been out of North America. 25 to 30% of the people have passports, but I'm not counting the people who just go to Mexico or Canada. And so 80% of the people in America have never been out of North America, so they actually have no idea what places like the Middle East are like.
Why are you looking at our interns over here?
Education. And so the general John Q. public has really very little understanding about what any of this is.
Oh, for sure.
And all the good part is that one understanding they do have is the midterm elections are coming up, and Mr. Trump is going to do anything he can to keep oil prices down. And if that means delaying filling the SPR, that's the easiest decision he'll ever come up with. And so there's no rush to refill all this inventory that we've depleted over the last 4 months yet. And so that was one of the things that I thought would help oil prices go down a little bit further, understanding the political ramifications. That's now out the window.
Yeah, so let's go back to why crude got down so low. You know, part of it is it wasn't showing up at commercial inventories, which is why I went through those numbers. But the other thing is you had China off the market to the tune of, 4 million barrels a day. And then all of a sudden we introduced this slug of 100+ million of oil that had been trapped in the Arabian Gulf that's now flooding the market into a market where demand is down meaningfully. So there was this kind of what I would call an artificial surge of crude entering the market. Oh, and 7.5 million of refinery offline. Well, if the refineries aren't working, they're not consuming oil.
That's right.
Right? So you have a product shortage. Your oil demand is not anywhere near normal because of the refinery shutdown and the China reduction and the SPR still being shoved into the market. So I was looking at it a few weeks ago. I'm like, oh, this is bad. Like we're going to have for 30 to 60 days, really probably 30 to 45 days, this kind of glut, this rat through the snake.
Takes 28 days to get from the Gulf to the Persian Gulf to the U.S. Gulf Coast. So we had said that that'd be the relief when they first opened it.
Right.
And then 28 days later, when it hits the Gulf, though all the politics have changed now. So it wouldn't have surprised me to see oil, I won't say go down lower than any 65 or anything, but as that oil starts to hit that 100 million barrels that was stuck in the Persian Gulf, it still hasn't hit yet.
Right.
It's on the water, and it's not captive anymore, but it's still on the water and coming.
Yep.
And so that has been a concern. The fact that Iran is the one that's putting most of that oil into the market is a concern.
They are responsible for 65-70% of the transits going through the strait.
Yep.
Normally, they're less than 10%.
I was going to say, yeah.
Normally, it's less than. So they're the big winners. And it did surprise me that Trump said, all right, enough. Yeah, I know they were blowing up some stuff, but I figured, 4 months before the election, he's just going to play it cool and try to put off. And that's, by the way, that's what Iran wants.
Yes.
The longer they draw this out, the better off they are. But something changed his mind this week where
Doesn't take much.
They opened up a can last night.
Yes.
And, so, but I really don't think we will ever get into a situation where we control the strait. And that's kind of a really big deal.
I don't see how. Iran is a country of 80, 90 million people. It's a big country.
It's huge.
With lots of people and a 1 million person standing army. And we did not wipe out all of their military capability. It's spread too far around to have done that. And the little speedboats that they have, and now they're back to planting mines. And the thing that surprises me, though I think this is positive from a political point of view, they're now bombing ships that are going through the Omani side of the strait, and that's a direct assault on someone else's sovereignty.
Right.
And you may not like the idea that they're sneaking it past you. But, so the good part is I think Trump's going to have a great deal of support from the GCC countries who didn't want him to sign a deal anyway. They want him to go finish the job.
Right.
Because they're the ones who are going to pay the toll or the environmental fee or the management fee or whatever we're going to call it. It's legal.
Right. Yeah, I would add one other thing to that is, you've got this long coastline of which, let's say 5 to 10 miles of that coast is really important. Giant cliffs, gazillions of caves, easy to hide, drones, miss whatever. So that's impossible to root out.
It is.
And so I just think it's going to be really challenging for us to go try to exercise long-term control. And it's expensive to escort all that stuff because you've got air cover and, oh my gosh. So I don't know what his out here is, but I think Iran ends up in one form or another controlling the strait, for a long time.
Well, I know one thought Washington had was if we lift the sanctions, we allow them to use trade in the dollar, use our banks.
Yep.
They'll get so spoiled. It's like giving a starving man who's been starving for 7 years a meal, as long as he does something, and then you say, okay, you're not doing it, I'm taking it away. And so Washington had hoped that would be an incentive to behave. These are religious fanatics who don't care about the people, though.
Yeah.
And the religious fanatics in Iran are only about 10 to 15% of the total population. And we've been seeing the week-long burial ceremony for the former Supreme leader.
That started July 4th, oddly enough. And ends the 9th. Khamenei, they're changing the pronunciation of his name now. His son has still not shown his face. And the crowds are in the tens and hundreds of thousands, all under death threats, show up or not. The signs, death to Trump, are written in both Farsi and English. Most of those guys are probably paid by the IRGC.
I'm sure.
Yeah, it is. You look at that theory you just put out, and for you and me, you starve the guy, you feed him, we like to eat. That would work for us, but we don't have that mentality.
We are rational most of the time. Rational human beings.
Yeah, isn't death to whoever is my number one. But for a lot of those guys, that is their entire mission in life, and it's hard to overcome that.
The other thing a lot of people don't understand, if the IRGC were to say, okay, we're turning it over to civilian government and we're stepping down, they'll all be killed.
Yeah.
And so if you have the choice of being a jerk and an asshole and a bad guy or being dead,
probably going to choose.
I'll take door number one.
Yeah. So now, it sounds kind of harsh to say they'll control the strait, but reality is there's Adam Smith's invisible hand still going to be at work, right? And so Saudi will reroute their oil flows. Mm-hmm. UAE will reroute their oil flows, and all of that region will end up rerouting somehow. It will take time.
Arbitrage cured by time and money.
Yeah, and the time will be, given the amount of money in that area, the time will probably be a lot less than we think, and not sure there's a whole lot of environmental restrictions on laying a pipe
permitting issues
across the desert, right? So I would think 6 to 18 months you get a lot of that crude to market anyway. Mm-hmm. So this is probably a 6 to 18 month problem. Which by the way, if let's say we're averaging 5 million offline for 6 to 18 months, that's actually still a really big deal for the next year.
It is.
And the other side of that is, we've seen this ramp up in crude, and everyone's like, big sigh of relief, everything's fine. Trump's like, oh, oil's going down. No, refinery margins are like the highest we've seen, and your shortage is in product, not crude, but it will eventually go to crude. China eventually has to come back into the market, and oil prices and our diesel and gasoline will go higher. Well, okay. What are the consequences of that? Well, That's a big deal for inflation. Like, that's a huge deal for inflation.
Yes.
Everything's linked to energy, right? And if energy prices go up, you're going to get inflation.
Every part of the economy.
It's
chicken prices on up.
Everything. And then what is the Fed programmed to do normally with inflation? Raise rates. Okay, well, guess what? That whacks the, I mean,
Not exactly why Mr. Warsh was picked, though he has shown great independence so far.
Again, the market is saying we're out of the woods. I think the message that I would have is, no, we're not out of the woods. Now, there's going to be a lot of volatility, and I think Trump will do his deal to try to keep oil prices down. What rabbit is he going to pull out of his ass next week? Yeah. Who knows? He is such a brilliant, creative guy in a lot of those aspects.
He is.
And from the jawboning to, just stuff you don't think about. Taking out the Venezuelan leader, right? It's like, what just happened? And
a lot of Americans criticize his negotiating techniques because they're not the usual politicians' negotiating techniques. But I have to say, in the Middle East, where I've spent a decent amount of time, they understand power more than anything. Being a nice guy, Jimmy Carter didn't work for him.
Right.
And so, to be perfectly honest, Trump's negotiating style is the style you want with people in the Middle East. May not be with people in Chicago or L.A. or Baltimore.
Right.
But it fits in the Middle East.
Well, and that's why you and I could never be president, because we're too nice.
We're too nice people.
Right. Well, that and all the other pictures. And
lack of capability, the history we have. That CIA or FBI interview process would be an ugly thing.
It would not be good.
Okay, so here we are. We've got drill baby drill going on. I mean, the rig count is up in the U.S., 9 rigs in the last month?
It's the oil rig count, and we can argue whether a lot of the Delaware wells are oil or really gas, but the oil rig count, depending on what service you look at, is up. On a base of 550-ish is up. Anywhere from 20 to 40 rigs, depending on which rig count you're looking at. Gas rig count off of a much 100 and something base, up 20 rigs, right? That's huge. So gas is going to happen anyway, but the oil rig count is responding. Are we really going to get a lot more crude out of the U.S.? First of all, is it really crude? It's very light liquids that we can use in petrochem, but you're not using them to make diesel.
No.
So, but you can send them to Venezuela
and swap out,
and the refinery.
You use it as diluent in Venezuela.
Yeah, exactly. The refinery system, everything works really well if you have that combination. But even with that, liquids, 200,000 or 300,000 of growth. I mean, I don't think.
I won't say that's optimistic, but it sure as hell isn't pessimistic either.
Yeah, this year or next year, and keep in mind, we're talking about, everything's solved and we're only offline by 5 million a day. Well, I'm not sure that 200,000 or 300,000 is going to help us.
That's like taking the Permian offline.
Yeah, it's.
And if you said you were shutting down the Permian completely, that might have an impact on oil prices, but it hasn't seemed to.
I just can't emphasize the magnitude of firsts we've seen in the last 4 months. I mean, stuff you and I have not come close to seeing in our careers, and all of a sudden it's all happening at the same time. The refinery outages, the 10 million a day offline, and China whacking their demand by 4 million a day, which nobody could ever do. You can't do that. Well, they did it.
But we've got very sophisticated people these days who trade oil and gas. This isn't like 15, 20 years ago when nobody knew the difference between natural gas and gasoline. You've got some very sophisticated players
Right.
All the major oil companies have trading houses.
Yep.
Vitol and the rest. I mean, these are smart people who are playing with oil.
Right. Well, those smart people got out a lot sooner than I did because they saw, wait a minute, where's the demand here? China's just shut off, and the SPR, and so they were seeing that in the flows because they managed the barrel from wellhead to the burner tip and all the steps in between. You know, the first 2 months, every one of us thought, oh, this is going to get bad. 150, yeah, that's maybe. You know, that'd be a low price, right? It's going to go higher. Then you start redirecting the demand and redirecting flows, and okay, not demand destruction. I want to be very clear, but rerouting and other sources that alleviated the strain on the commercial system. And all of a sudden, you're into a situation where, like, wait, we have too much oil right now for a very short period of time.
The glut's back, but this is the amazing thing, and this is what you mentioned is usually we have demand destruction caused by high price.
Yep.
We don't have people voluntarily deciding not to. Now, there was the fact that they couldn't get oil. Okay, so usually if I can't get oil, I'll have to pay up to get it. Rarely do people say, well, I can't get oil. Oh, well, I'll just close everything down and not take any more.
Right.
That hasn't happened before.
It's a slow process that takes time. You have to, in the old days, it was, okay, Jethro decides, you know, God, it just cost me $300 to fill up the boat. Maybe I won't go to the lake today and take a few extra laps around the lake, right? Because that's something I don't have to do. I still got to get to work.
Yep.
Right. So that's non-negotiable. You're driving to get to work, but you had a little bit of flex, but you know,
very little.
That flex was at much higher price.
Yeah.
Jethro ain't saying that hey, I'm not going to get in the boat because oil is $100 and gasoline's at $4, right? It's $5.50. I got to think twice about that. I'm going to, you know.
So natural gas, everybody knows that we're going to increase demand for natural gas through LNG and data centers and everything else over the next 5 years. I asked a panel of gas producers. We're at 100, 105 Bs today, and in 2030, we're going to be at 130 Bs. And I asked all three of these guys, big producers, Expand and different people, EQT, is that high or low? And they all said it was low. Okay, so I've got gas still below $4.
$3.20, I think, right now.
How do I get another 25 Bs out of this with that price over the next 5 years?
So, you know, you and I talk a lot, and I did the thing back in February in an event with a couple hundred people, and you brought up the point that, you know, wait a minute, 20 rigs and we get an extra, you know, X Bs a day, all, you know, out of the Haynesville, and that's all you need. Well, the demand's going to be there. Demand is rocking. You know, we've all by now run the numbers, and the numbers look good, although the power side is certainly going to show up a lot later than many thought.
Yeah, that's my opinion.
It takes time to get those assets in place and get them running and get them stood up. So I think that's more a 28, 29 phenomenon, but it's a real number, right? It's a big number for gas, particularly with all the reciprocating power over turbines, which is much less efficient and will consume more gas.
But we can get them online quicker.
You can get them online in 28, and then, you know, Grok and Amazon and et cetera, Anthropic have all their bandwidth that they need. So that's happening. LNG's happening. I think, you know, by the end of this decade, 25 Bs, maybe more, 30 Bs is a reasonable number. Mm-hmm. You say, what? Where are you going to get 5 Bs a day per year? Well, guess what?
Delaware.
We're going to have 4.5 Bs come online in the fourth quarter from the Permian, Delaware Basin mainly. And that's on top of those 20 rigs that went into Haynesville. And Eagleford is cranking. And we're going to put a lot of this data center stuff in the Northeast. So that gas won't be trapped anymore.
Thank God.
The gas in the Permian, where you're going to place a lot of these, data centers that aren't inference, right? That they can just train out there, a few hundred miles from the main hubs.
Chevron's 2.67 gigawatt effort.
Those are just such big numbers. People don't understand how big.
I know.
How much? I mean, a gigawatt, 10 gigawatts is 2 Bs a day of gas demand.
Yeah.
I mean, that's like crazy. We're talking hundreds of gigawatts that are coming out. Anyway, so when I go through the math, it's like, I don't know if we know the gas is there in the Permian, that's basically untouched. We know the gas is there in the Marcellus, that is trapped, right? And the market's pretty smart. The market figures that out, and are we not going to build the pipes to get that gas out of the Permian when the pipes are not charging, but the operators are losing $8 or call it $2 to $8 per MCF.
The Waha hub, natural gas hub for the Permian, has been a negative number for half of the last 2 years.
Right. And so normally, that gas price, you'll charge them a fee to move that, but you're getting -5-ish for the last 6 months. Well, that's a big incentive for a pipe to get put in place. So I think the pipes will be there, right? They're going to come. It'll be lumpy, like the 4.5 Bs that hits in Q4, but it's going to happen. As that happens, then I think you're probably, so I'm moved around to your camp, where I think we will find the gas for that, call it 30 Bs of demand, and you're going to find it, I think, at a sub $4 price.
And this is, we wrote about it a couple weeks ago. We don't need all that gas yet.
No.
Until you turn that data center on, your gas demand is zero.
Right.
And people don't realize it, but most of these data centers we spent a lot of time talking about are still in the FID stage. And we are ramping up LNG. We're about 19 Bs a day now, going to 25 or 26 over the next couple of years. But until you turn on that plant, the demand is zero.
Right.
And so the problem I always had, this is a problem I always had as an analyst when people wanted to project things in the oil business, none of the models we ever used could be run on a computer because nothing is linear in our business.
Right.
And Excel is only linear, if you would.
Right.
And so everybody's been doing linear extrapolations, which isn't how it happens. So it's going to be, to your point, very back-end loaded. And until we need it, and we've proven, give me enough incentive, I can deliver a lot of gas quickly.
Right.
Whereas my turbines may take 3 years.
Right.
And so
now let's be clear. $3.50 gas is not a disaster for the gas.
If you can't make money at $3.50, $4 gas, you got no business being in this business.
Particularly if you're in the Permian and you're selling oil at what is likely to be a higher deck for longer. Not the
higher than 4 months ago, at least.
Yeah, 5 months ago, we were all thinking, all right, 60, 65 is your long-term deck. And now I happen to think that longer-term price is 85 to 95. But
ours is 84.
Okay, so, much higher level there. And you get $3.50 gas, total win for those guys. But you know who really kills it in the gas market? It's all the pipelines and the compressors and all the infrastructure that has to be brought to bear to deliver that gas to the end market.
That's what gets me is everybody wants to say which natural gas, EQT or Expand, who should I buy? And the reality is it's the infrastructure players.
Yeah, Williams
yes,
or,
I like to buy the Williams of the Middle East, whoever they are.
Enterprise seems to do pretty good over the years.
Another one I own. And we've got to build, Enbridge is building an interconnect. Right now, none of the Permian gas can go east of Houston.
Right.
And when you think about it, all the LNG is east of Houston.
Right.
And none of the gas from the Permian can get there yet. And so as soon as we start building those interconnects, right now Cheniere is having the time of their life in Corpus Christi because they are about the only game in town for Permian gas. But you start building interconnects, and that solves a whole lot of problems to me.
Right. And the incentive's there to do it, so it's going to happen, right? And so, and it's most that's Texas, so it happens sooner than it does, say, in, I don't know, New York State. Yeah, I mean, I think there's a lot of real gems in the gas side of things that are going to make a lot of money, and it's a completely different growth profile than what we've seen in the past for the pipes and the other things, compressors, et cetera. Is it E&Ps because they're going to get $8 gas like the old days? I don't think so.
No.
But is it E&Ps because their gas production is going up X percent per year when we've been modeling no growth for a while?
Or negative growth.
And the answer is, okay, yeah, they'll win with that.
Yeah, 16% free cash flow yield. You don't need a whole lot of extra help past that.
Yeah, most of the companies that our guys cover in research, and we aren't E&P guys, you and I, but I pay enough attention to it to where if you're at 85 long term and 350 gas, most of those are generating well north of 15% free cash flow yield, and many of them are up closer to 30%.
I was going to say I'm low mid 20s.
Yeah. So yeah, that's a pretty good deal if you're an investor, particularly when we're driving inflation higher at 85, and
I'm not truncating that DCF in 3 or 4 years because we're going to quit using all these things.
Right.
If nothing else, we have proven our value with what's going on in Iran. 2 years ago, the head of the UN, the head of the UK, everybody was telling every financial institution, do not loan money for oil and gas development. Do not loan money to E&P companies. And nobody's mentioned any of that here lately that I've really read.
Yeah, that not lately. No.
Because it turns out, damn, we matter.
Yep. No, this business, I've always said, what do you need to drive economic growth? You need labor. Now, maybe robots in the future, but you need labor. But if it's robots, and this gets to the big middle one for me, which is energy, you have
every civilization, every war. It's always been about cheap energy. Whoever has the cheapest power, the cheapest energy, wins. That's what's killing Germany right now.
Yep.
It's what's killing the UK right now. And it's what's making China the powerhouse that they are.
The tightest long-term correlations you get with just about anything out there are the relationship between economic growth and energy, right?
Yes.
And then the other thing that you kind of need is capital, right? And that's where the AI thing gets fed. Because look at the capital those guys are raising right now. SK Hynix just came here.
$8 billion.
Every one of these guys, we're just going to do a $20, $30 billion bond, like 7 or 8 of them. And I'm like, well, where's the federal government going to get their money? Because that's a lot of billions that they're sucking out of the system for all the AI and everything, on top of the equity they're getting from the market, which has been going up and up and up. And so the capital's been there, at least so far. The labor kind of is there, although that's an issue, going to be an issue building out some of these.
6,000 people living in temporary housing in Amarillo right now. So.
Yeah. So that's, that could be a little bit of a bottleneck. But you're going to have the energy, and that was the shock for all of these, let's call them, before all this build out started to occur. The Googles, et cetera, of the world were all, we're just going to do green energy. And that went out the door really quick when they realized, wait a minute, we actually need something that works here.
All the tech companies saw their sustainability reports reported that greenhouse gas emissions have spiked significantly in the last year.
Yeah.
The other thing I think is interesting when you talk about capital, while we're critical, you can't run a data center without power. And most of that power is going to come from natural gas.
Right.
Power is only 5% of the cost of the data center.
Yeah.
And so whether it's 4% or 5% or 6% or 7%, if you got to get that data center open, that's not your biggest problem.
Right. Yeah.
And so I think that's very positive for the industry as well.
Sure. So, if you look at, the gas side looks like a phenomenal growth area. The oil side, which everyone's written off, they say, all right, well, this is done. No, you're not going to fly jets on solar or anything, batteries or any of that crap. It is not going to happen. Trucking, which is a huge component of global commerce, is going to continue to be mainly diesel. Shipping, mainly diesel, bunker fuel, et cetera. And so you get down, okay, well, gasoline's the only thing you might be arguing. Petrochem, which a third of the
I was going to say, that's the real need for oil.
Yeah, and that's all going to be, the lighter ends we're producing here in the U.S., then you're left with, an increasingly small part that's gasoline.
Which is the second lowest utility of oil use anyway. Burning oil for electricity is the worst.
Yes.
But, and Saudi's still burning, I'm told, 1 million barrels a day to generate electricity. We always thought it was 250,000 barrels.
Right.
I'm told by people in Saudi that it's closer to 1 million barrels a day.
It may be 3 million now because they have a lot of extra sitting around.
No, that's true. That's true. It's very cheap now. Okay. Well, Marshall, any last words?
No, I mean,
I'm not going to ask you to predict oil or gas prices.
I think, the message I would leave your listeners with is, there's been extreme volatility here, and a week ago or 2 weeks ago or 3, everyone's like, we're past this, right? This is not a problem anymore. The oil thing's going to be solved. And I would tell people, I don't think we're over. This is not over yet. Not just because the Iranian situation, but there's still, 1 billion barrels you're going to have to go replace minimum. And that likely gets bigger and bigger over the next 6 months. And then on the gas side, it stabilizes. Don't expect $8 or whatever. I mean, that's not likely to happen. But the crude side could still go anywhere on the upside. And any downside from here, I think, is fairly short-lived, i.e., in months, not in years.
Okay. Marshall, thank you very much.
Good to see you.
And thank everybody for dialing in. This has been Energy Espresso. I'm Jim Wicklund. And if you have any questions, I'm reachable. And I'll be more than happy to direct any questions directly to Marshall because he's smarter than me and knows all the answers.
Yeah, right.
Thank you all very much.